We'll talk about the two-column cash book, but the main thing that we're going to talk about is the trial balance. But before we extract the trial balance, we're going to talk about the two-column cash book, because that is what will help us extract the trial balance. We talk about the two-column cash book, and then from there we extract the general ledger, and then from there we extract the trial balance. When we extract the two-column cash book, the two-column cash book will help us extract the it will help us extract the general ledger, and the general ledger will help us, the both of them will help us extract the trial balance. So we'll first go through what we did in our previous tutorials about the two-column cash book, because that is what will help us extract the trial balance and the general ledger. So we have a transaction. We have transactions that happened in the month of June 2015. These were recorded in the two-column cash book. So on the 1st of June, we bought goods by cash. On the 1st of June, we bought goods by cash. According to what I explained in my previous tutorials, when we buy goods by cash, there are two accounts involved. There's a purchases account, there's also a cash account. So on the double entry system, cash is an asset. So in this case, bought goods by cash. Cash was going out of the business. So on the double entry system, when we go into assets, we debit what goes into the business and we credit what goes out of the business. So in this case, cash was going out of the business. So we'll credit cash and debit the purchases account. So in the two-column cash book, we have the cash account and the bank account. So the first transaction, we are debiting cash. We want to have debited cash by 1,000 because the goods that we bought were worth 1,000 by cash. We want to have debited cash account. On the 8th of June, we sold goods to M. Mutogo by check. We sold goods to M. Mutogo by check. So there are two accounts involved. There's a bank account and there is also M. Mutogo's account. So in this case, when you go into the double entry system, we debit the receiver and credit the giver. So in this case, we received goods we sold goods to M. Mutogo. So meaning this person is the one who received the goods. So in this case, we are going to debit this person's account and credit the bank account. We want to credit the bank account by 2,500. This is just a revision of what we did. And then on the 9th of June, we received goods from Mulenga worth 500 by cash. We received goods from Mulenga worth 500 by cash. We received goods from Mulenga worth 500 by cash. There are two accounts involved. There's Mulenga's account and also there's also what is called there's also the cash account. So we received goods from M. Mulenga. So we as a business received goods by cash. So cash was coming into the business. So in this case, we are going to debit cash by the same amount. And then on the 15th, we sold motor vehicle by check. Motor vehicle by check. We sold motor vehicle by check. Motor vehicle is an asset. So it was going out of the business. We sold motor vehicle by check. It was going out of the business. So anything that goes out of the business, we credit. So we're going to credit what goes out of the business and debit what comes in the business. So in this case, motor vehicle was going out of the business and cash was coming into the business. No wonder. So we say, no, this is not the transaction that I was talking about. On the 9th, this happened on the 20th. This transaction happened on the 15th. I made a mistake. So on the 15th, we bought machinery by cash. On the 15th, we bought machinery by cash. So bought machinery. This is an asset. And when we go back into the double entry system, we debit what comes out of it, what comes into the business, and we create what goes out of the business when it comes to assets. So assets here, machinery was coming into the business. So we debit what comes into the business and we credit what goes out of the business. So in this case, this machinery was coming into the business. So we debit the machinery account and credit the cash account. Since cash was going out of the business, we credit the cash account by this amount. So we credit the cash account by this amount, and then we debit the machinery account by that very amount according to the double entry system. So what I've done is also the balance carried down, the balance brought down, and these are the balances that we have. So take note of this, because this is what will help us extract the trial balance. This is what will help us extract the trial balance. So let's now open another book, because this is just a division. I was just going through what we did. So let's open another book called the General Ledger. We haven't discussed about the General Ledger. This is the first time we're discussing about the General Ledger. So I'll explain it more into detail, because this is something that I haven't talked about. So what is the General Ledger? The General Ledger, this is just the book where we record the past transactions, the past transactions of the company in form of accounts. This is just a simple definition that I can give. So it's a book. So this is how it looks, right? I'm going to grab this part. Okay, so we have another book called the General Ledger. So we're going to open the General Ledger. General Ledger. And I said this is just the book where we record the company's past transactions, and this is where we record the company's past transactions, and this is what we present. We record it at the end of each accounting period. It can be in a month or whatever, but at the end of the accounting period, it has to be extracted. So, the two-column cash book, we are only recording the bank and the cash transactions. So, like in this case, we said we bought goods by cash. There's the purchases account and the cash account, but we were only considering the cash account because the two-column cash book involves the cash and the bank account. We were only considering the bank and the cash account because the two-column cash book considers these two. Either it specifically involves the cash and the bank account. So now there are two accounts here. Like in this case, both goods by cash rate 1,000. There are two accounts involved. There is the cash account which we used to record in the two-column cash book in our previous tutorials. But there's also another account which is left here, the purchases account. We have to record this one in the general ledger. In the general ledger, so that the double entry system rule is that completes the double entry system rule. So both goods by cash rate 1,000. There's a purchases account and there's also the cash account. The cash account is the one that we record in the two-column cash book. So the remaining account, the purchases account, this is the account that we are going to record in the general ledger. So this is how the general ledger looks like. Here's the dates. I have to make it a little bit easier than it was here. I would have enough space. So we have the column for the date, the details, we have the column for the folio, we have the debit and the credit entry. So this is how the book looks like. It's just a simple book. There's nothing complicated about this book. So there's debit, there's folio, there's details, and we have a date. Date and it is quite bad. So this is the month of June. So you indicate the month. This is June 2015. So this was an accounting period that was used to record whatever transaction we have. So now this is the general ledger. This is how the book looks like. It has the column for the day, the details, the folio, the debit and the credit side. So those remaining accounts, like I said, we're just considering the cash and the bank account. Those remaining accounts are going to be recorded in the general ledger. So in this case, with others, there are actually three ledgers. There's the general ledger, there's also the purchases ledger and the sales ledger. Others consider all those three. They record whatever transaction involving purchasing, the purchases ledger, sales, the sales ledger. But for me, I've simplified it this way. There's nothing like opening lots and lots of books for me to record whatever transaction is to which book and whatever. For me, I just take everything, whether it's sales, whether it's supposed to be recorded in the sales ledger or the purchases ledger, I just record everything in the general ledger. That's how I've just simplified it. It works for me, so whatever works for me might not work for you, but try this one because it's a little bit easy. So bought goods by cash, we have the purchases account and the cash account. Bought goods by cash with 1,000. This is the transaction that happened on the 1st June 2015. So indicate the date and first of all, this is what I forgot to explain. This book, this is where we're going to open all those transactions. And they are not different from these other accounts. We consider everything, all the things, all the particulars, the details that you saw in the 2-column cash book, the 3-column cash book. Those are the same details that we are going to record, even in these accounts that we are going to be opening the general ledger, because all those are just accounts. So here we are going to open the purchases. Since we bought goods by cash, we're going to open the purchases account in the general ledger. So this is the book where we're going to open the purchases account. So here we have an account. So you indicate the name of an account. Purchases account. I encourage you to maybe indicate like these accounts in calculators because they look more polite. So when we have opened the purchases account, and on the purchases account, on this account, this is an account that involves the transaction that happened on the 1st of June, where the transaction was bought goods by cash. So we bought goods. So this is an account. You underline it properly with a ruler. And bought goods by cash. So we indicate this. So this account was receiving, as I say. This account was receiving, and cash account was going out of the business. Definitely, we are going cash account. We are crediting cash account because it was going out of the business. And to complete the double entry, you have to do the opposite of what you have done to the other account. So here we're going to debit it. So purchases account is going to be debited by 1,000. Here you indicate the currency according to the country where you live in. The currency they use, here in Zambia they use Kwacha, in Ghana they use Ghana cedis, in Nigeria they use Naira, in South Africa they use Rands. So you indicate that, and then you balance of this account. Since this is the only account that is involving purchases, yes. Since if we as a business purchase another item, or maybe if we purchase goods again, maybe by cash or check, we are going to indicate it on the purchases. But in this case, there's only one transaction that is involving purchases, so we are going to close this account. So in closing this account, like I explained in my previous tutorials, we are going to have the balance, because these things have to balance. So we have the balance carried down. So the balance carried down, this one is here, we're going to put it here. So it will be 1,000. I don't need to explain much about this, we talked about it. And then we have the same 1,000 here, 1,000 here, and then we have the balance carried down. I explained this, let's go back to the previous tutorial. Balance carried down, which probably maybe happened on the 30th of this month, since maybe maybe let's assume this was the end of an accounting period. So yeah, the balance of that account and everything just came there. It's as simple as this. So we have another transaction which happened on the 80th of this same month. We have another transaction where we sold goods to Emuto, the Runda guy, by check, weight 500. So the same applies with this one. The bank account has already been recorded in the two-column cash book. Now we are remaining with this guy, Muto's account. So Muto's account is what we are going to record in the general ledger. So we're going to record Muto's account in the general ledger. So here we say we are going to open Muto's account. So we open this account. So we have the transaction involving this account. Happened on the 8th, where we sold goods to this guy by check. So goods by check. So is the receiver, what is the laboratory? We was receiving, this guy is receiving. So we are going to credit his account. So this transaction is done by check in bank. No check account, takuwa bagushiri. Bank account. So this guy received this amount, 500, if I'm not mistaken. Yeah. 500 received that much. So this is the only transaction that is involving involving Mutobu. Yeah, this is the only transaction, so meaning you are going to balance it off. We are going to balance it off. So we have the balance carried down, which is 500. Also the balance so we balance it off this way. My voice is very small. Please, those people can pay to buy a bigger boat. You are welcome. So we balance it off like that. Balance brought down. We balance it off like that. End of story. So continuation. No. This is general ledger. So we'll continue from here. So this is just a continuation. In column ya date hapa. Hapa details hapa. The folio, the debit and the credit side. As simple as this. Hope it's busy. Okay. So we are done with this one. So we have another account which happened on the 9th, if I'm not mistaken. We have another account which happened on the 9th. It happened on the 9th. This account Yeah, received goods from Mulenga worth 500 by cash. Received goods from Mulenga worth 500 by cash. I don't have to explain much on this one, but this is something that we've already discussed. Both received goods from M Mulenga by cash. So in this case, we are going to debit the cash account and credit Mulenga's account. Since Mulenga is the one who was giving, so I'm going to credit his account. So we're going to open his account. So we say Mulenga, Chimulenga. So receive goods from Mulenga worth 500 by cash. So Mulenga was giving. This happened on the 9th, if I'm not mistaken. We received goods from Mulenga by cash. So there's cash here. And then this is the debit and this is the credit side. So received cash from Mulenga. Mulenga was giving, so we're going to credit his account by what? By 500. We're going to credit his account by 500. There is no other account involving Mulenga, so we're going to balance it off. So the balancing is done at the end of the accounting period. In this case, our accounting period was, the end of our accounting period was on the 30th of this month. So you indicate it there. So here we have the balance carried down, which is going to be recorded here. This same 500, hope it's visible. There we have 500 there, 500 there, and then we have the balance. The balance brought down, it is also 500. Well, our last transaction, bought machinery by cash. Bought machinery by cash. So we're going to open the machinery account. Machinery account. I want to open the machinery account. Bought machinery by cash. So we're going to open the machinery account. So bought machinery by cash. But cash was going out of the business, so we credit cash and we debit what was coming into the business. So we debit the machinery account. This happened on the 15th, and this transaction done by cash. So the machinery account was receiving, this is 7,000. Ensure that we include commas. And at the end of our accounting period, this is what happened. We have 7,000 here. We balance it off. We have 7,000. We have 7,000. And this again becomes our balance carried down. So this transaction, these are the transactions that we had in this month of June 2015. So from here, this is what will help us now extract the trial balance. So from here, we're going to extract the trial balance. We have the general ledger here. So we're going to extract the trial balance. So it's as simple as this. SCCA students, this is very, very simple. This is a very, very good foundation in SCCA. This is a very good foundation in CIMA. This is a very good foundation in Zika. And this is also a very good foundation in financial accounting for those people that are studying general accounts. So any form of accounting, this provides a very, very good foundation. So from here, we are now going to open the trial balance. So take note of whatever it is that all the transactions that we take note of whatever it is that we've talked about. Take note of all this, because this is what will help us extract the trial balance. Or I wish I had a bigger board, I would have. This would have helped us extract the balance extract the trial balance Nice. Now like this, I have to wrap this part. So what I'm saying, take note of this because this has to be written somewhere in your book so that you'll be able to follow whatever it is that I'll be talking about. So I'm going to lap this. Yeah. So this is how the transaction, this is how the book looks like. So I'm going to lap this. Then we open the trial balance, and that will be the end of everything. Simple tutorials, simple content, but very much useful in our day-to-day life, especially for those that are studying accounts, those that are doing entrepreneurship. Okay, we have the trial balance. You should have this knowledge when you are into businesses and everything. Because it's very easy to quit if you have, yeah, if you have no knowledge about this. At least if you don't know the double entry system, familiarize yourself with the single entry system, because that is what will help us record all those transactions in your business. But if you have zero knowledge about this single entry system, zero knowledge, how are you going to know whether your business is running per profit or per loss? So we are going to extract the trial balance. The trial balance as at, is it? Should be trial balance as at, yeah, at 30th June 2015. Very important. This title, for me, if you extract a trial balance or a 2-column cash book or a general ledger or a balance sheet or any form of financial whatever, if you record it without putting up the title, I'll simply give you a 0 because I don't know what you are talking about. I'll be lost. I don't know what you are talking about. So if you fail to write the title, then for me, I will take it as if you are just a confused chap who is trying to confuse me as well, because you can't record the book without putting up a title for it. So me, I'll take it as if you don't know what you're talking about, and then I'll just cancel everything. I'll just cancel everything because I don't know what you're talking about. Again, another rule in accounting: lines have to be straight. Lines have to be straight. You have to be very neat. You have to be writing something visible. You have to be very neat. If you have footer where you cancel a transaction and everything, it looks dated. That doesn't look polite. So the issue of footer, it has to be neat. At least that way, it attracts even more marks. But a situation where you are nabbing footer, you cancel stuff, you are busy canceling stuff, you are deducting marks slowly. Because every cancellation that you make, it leads to a deduction of a mark. So it's very important to make sure that you are neat and you put up the titles. There are rules. So for example, a trial balance as at the income statement, it has also its own form of title. So you have to familiarize yourself with those as well. So let's extract the trial balance. It's a simple book. This is how it looks like. This is how it looks like. So we have the column for the credit side, the debit side, and the details. As simple as this. So here is credit side, we have the debit side, we also have the details. The details. Is this the correct spelling? I don't know. So, what is a trial balance? A trial balance is a list of credit and debit transactions. It's a list of the credit and debit transactions. A list of the debit credit transactions extracted from the books of accounts at the end of each accounting period. So, like I said, all those transactions that were recorded in the two-column cash book, all those transactions that were recorded in the general ledger, they have to be extracted now in the trial balance. The balance, when you hear the term balance in accounting, meaning something has to balance. We have the balance sheet where something has to balance up. We also have the trial balance where things have to balance. So what am I saying? The total figures that we are going to have on the credit side should correspond with the total figure that we have on the debit side. I repeat, the total figure that we are going to have on the debit side should correspond with the total figure that you are going to have on the credit side. The total figure that you are going to have on the debit side should correspond to the total figure that you should have on the credit side. Yes. So figure kwato total uku na kwena ifiri abasemu. So this is what a simple book looks like. The trial balance looks like. So ngafiro okubalanza nyisha ama transactions kulo mwachira panga kodya nyinshi mwafiru fyani epale kama numba nyinshi lugeni pali aba ibile shani. So it has to balance. That means your transactions were perfect. But if they fail to balance up, just know that there's something wrong. There's something wrong. You messed up somewhere. You have to go back. You have to go back to the trial balance, to the general ledger and the cash book to know where you messed up. But it has to balance. If it balances up, then it means you have done. It doesn't end here. From the trial balance, it goes to the income statement. From the income statement, it goes to the balance sheet. Now, the balance sheet that gives you now a clue about the financial status, the financial position of the company. So it starts from simple to complex. So once you make a mistake, maybe on the transaction, maybe when recording transactions in a cash book, you make a very simple mistake. You have 3 zeros and then you make a mistake, you write 2 zeros. That can affect you even in the balance sheet. It will fail to balance out because of that very mistake. It will fail to balance out. But in accounts, anyway, accounts is very simple because every correct entry leads to a mark. But then imagine yourself as an accountant and then you make such a mistake. The trial balance fails to balance out. It affects the income statement. It also affects the balance sheet. So you have to be very, 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 very careful in dealing with these transactions. You have to be clear-headed. You should be focused when you are recording this transaction because they can cost you in these other forms of books because the foundation is what matters the most in accounting. So every record that you put up, you should make sure that it's a correct record and it goes to the right side of the account, whether the debit side or the credit side. But again, there are errors that we made. We talk about the errors of the errors in accounting. We have the error of principal, error of complete reversal. So there are certain errors that are made in accounting. So when an error is made, for example, if a trial balance fails to balance up, or maybe an income statement fails to balance up, or the balance sheet fails to balance up, there are errors. Errors are also extracted from those. That is where now a team of accountants sits and begins to search for those errors, and they give them lots and lots of names, and after correcting those errors, they do the re-entry in the books of accounts. So it's very interesting, but we'll talk more about it We'll talk more about it. This is just an introduction. We haven't even started. This is just the introduction to accounting. We haven't even started. Accounting is complex, but the foundation is very important, because every transaction that will be recorded in these other topics that we are going to discuss will be based on the double entry system. So watch my story, especially the first story that I made about the double entry system. All those stories, because all the transactions that we are going to make, wherever you go, so long it's accounting, it follows the same double entry system. So you appreciate it more when we discuss more topics. So we're going to talk about the trial balance here. Let's extract the trial balance. So this trial balance, when you go back to the cash book, so what happens is, we recorded something called the balance brought down. So the balance brought down, there is a side where the balance brought down is recorded, either the debit side or the credit side. So that same figure, the balance brought down, the figure that we go with in our next transaction, the balance brought down. That is the figure that we are going to record in the trial balance. So the balance brought down figure is what we are going to record in the trial balance. Make no mistake about this. The balance brought down figure, this is the figure that is recorded in the trial balance. So all the accounts that we have, we are going to get the names of those accounts, and then we are going to get the balance brought down figures. Those are the same figures that we are going to record in the trial balance. And at the end of the day, they have to balance. If they fail to balance, we have to go back. That is where I mentioned the aspect of errors. That's where it comes in, when such mistakes are made. Now, there are mistakes that are made on a large scale and things like that. It depends on the mistake that you've made. It depends on the mistake that you've made. The mistake that you've made also, there are names of errors depending on the mistakes that you've made. This is the correct this is the correct way of putting it. So every error has got its name. So depending on the type of error that you've made, there is a name that is given to it, but we'll discuss more about it later. So we're going to get the figures, the balance breakdown figures. Those are the figures that we're going to record in our trial balance. And those figures also consider the side where they're being recorded. If they are recorded on the debit side, we're going to put it on the debit side. If they are recorded on the credit side, we're going to put it on the credit side. So let's take ourselves back to the two-column cash book first, because we're going to start with the cash account. We're going to start with the cash account. The cash account, let's go to the two-column cash book and identify the balance brought down figure, the balance brought down figure for the cash account. So let's take ourselves back to the two-column cash book. No wonder I recorded the two-column cash book here, because I didn't want to confuse people. People would have been more confused if I wanted to start with the general reader, but people would have been more confused. No wonder I started with the cash book and did a bit of a revision. So let's go back to the cash book that we had. We had the cash book, to the cash book, the two-column cash book that we had, where we have the cash account. So on the cash account, what is the balance brought down figure on the cash account? Okay, and then muna winu hapa cash account figure yesu ni 5,523. We've recorded it on the credit side of the cash account. So the balance brought down here is 5,500. So you indicate the currency here, the symbols of your currency according to the country where you live. So there, so we have the balance brought down figure of 5,500. Ensure you indicate these amacom, ensure that you indicate them. Failure to do that, there will be deduction of marks. And for me, I'm good at deducting marks, especially on these simple rules that people tend to forget. I do deduct marks. 1 mark, 1 mark, 1 mark, and then at the end of the day, you discover out of 20, maybe you just get 10. 10 out of 20, and when you look at how you've balanced everything is balanced properly, but because we are making mistakes, cancelling there and then, I'll deduct marks. So you find that you just get 10 out of 20. But now balance so cash account, this is the figure that we have, the balance breakdown figure that we have on the credit side. So let's go back to the same book, the 2-column cash book. We have the bank account on this very book. We have the bank account. The bank account we have the balance breakdown figure of 2,500. We have the balance brought down. We have the balance brought down figure of 2,500. It's also on the credit side, if I'm not mistaken. It's also on the credit side. So we have 2,500. So we are done with the 2-column cash book because all the accounts, the balance brought down figures involving these accounts have been recorded. So we are done with the 2-column cash book. So let's go now to our general ledger. Our general ledger, the first account that we have is the purchases account. So this one is the banker. I forgot to indicate it. I forgot to indicate it. Yeah. So the first transaction that we have in the general ledger is the purchases. The purchases. We have the purchases account. The purchases. So the purchases. Let's identify the balance, where the balance brought down figure, what the balance brought down figure is, and where it has been recorded. So the balance breakdown figure is 1,000, and it has been recorded on the debit side of this account. It has been recorded on the debit side of this account. So we have 1,000. Ensure you put up a comma there. Failure to do that to lead to the deduction of marks. Again, we have another transaction. Motovo's account. We have another account, Motovo's account. There was where we have the balance brought down figure of 500, which is recorded on the debit side of this account. So we have the balance brought down figure of 500, which is recorded on the debit side of this account. So we are done with this. So our last one, not our last one, but our second from last, we have Mulenga. So with Mulenga, we have the balance brought down figure of 500, which is recorded on the credit side of this account. So when Mulenga, we have the debit account. We have the debit. When Mulenga, we have the balance brought down figure, which is recorded on the credit side, which is 500. It's recorded on the credit side, and it's 500. And then the last one, we have machinery. Bought machinery by cash. So we have the machinery account. When you go into the general ledger, the machinery account is the balance brought down for this account is 7,000. That is recorded on the debit side. It's recorded on the debit side. So this is our last transaction. This was our last transaction, and 7,000. So it's recorded on the debit side, and then you have to balance it off like that. It has to balance. If it fails to balance, then so let's balance it together. So we'll start with the debit side. So we have 1,000, we have 500, we have 7,000. The figure is 8,500. Even here, it has to be 8,500. Let's see. We have 5,500. We have 2,500. We have 500. Yeah. So even here the figure is 8,500. So it has balance, meaning our transactions were correct. There were no errors. So this is what is expected of you to do as well. So this is how we extract the trial balance. So now we are going, so in our next story we're going to discuss about the final accounts. We are done with this simple stuff. Let's dive into something that is more detailed. The real world of accounting. Let's dive into the real world of accounting. This is just the foundation of accounting. This was the first foundation of accounting. Simple things. Very simple. I don't know why it's difficult for some people to understand these simple concepts. But these are very, very simple concepts. Very simple concepts. You can master them even within a week. You can master these if you are serious. This is very simple. But you find out, you discover that people still have problems in just knowing where the figure is supposed to be recorded. Like I said, when you watch my first story, when I talked about the double entry system, that is the foundation, the real foundation in accounting. This will be very difficult for you. Some transactions will be very difficult for you to know where you have to, where the figure is, which side of the account the figure is supposed to be, if you fail to understand those concepts. So, and there are three that I mentioned. Three of them. Don't just understand one, because if you understand one, these other transactions will be very difficult for you. Because paramount what mara take credit, masa dabwati, we book was debit, mo papa attention debit, and that brings in a lot of confusion. Because even the time I was learning this, those are the types of confusion that we have. People just mastered that credit is the receiver and debit. Credit is the what? The giver and debit is the receiver. They mastered that, and that was the end of the story. But there are other things, there are other two concepts that you should master, especially at the beginning level. You can master the debit and the debit, the receiver, shan, when at that more advanced level, because the person that discovered this probably was thinking a lot, and this person had known these things already. And we started thinking a lot and came up with that concept. It's very correct, but at the beginning level, you have to master all those three concepts that I talked about in my first tutorial, when I was just introducing the double entry system. Those are those you never go wrong. You never go wrong, where you just debit the gains, and where you just credit the gains and debit the expenses, the losses. Those are very important to master, because when you just master the debit, the receiver, credit, the giver, you discover that you'll be very confused when it comes to that part where the expenses will be debited and the gains will be credited. You start thinking, no, but what attention credit, what attention debit, gains, I take it. You'll be confused. But when you understand the three, it will be very easy for you to know whatever it is that is happening. I think this is what even most teachers of accounting are facing. These are the challenges which most teachers of accounts are having. They'll just go, you just find this teacher, especially women, you just find this teacher, you just enter a classroom and you start, no, debit, the receiver, credit, the giver, what, and then that is the end. Once you master those, and then you'll be done in accounts. You reach a certain point in accounts, especially in final accounts. You discover that they're debiting the expenses and crediting the gains, and you'll be confused. You ask this teacher, and then you just say, no, it's a format. You have to master those. Watch my accounting tutorials, and then you have questions. You you understand it more. You have questions, especially those school going children. You even be challenging those some of your teachers, because some of these teachers, I don't know this. We have lots and lots of schools, lots of them. Mostly government schools are now being compromised. People are not going into government schools because there things are difficult. They will prefer to go to a private institution at the Shanyuko. It's not even well established, and then you find this one going there. I know I'm doing accounts. At the end of the day, they get a degree. They go to their teaching methodology and begin to teach, to cheat. This they'll begin to cheat, and then us will be confused. But madam, you say credit the receiver, the give, and the debit the receiver. But how come there? We're receiving the gains, and they explain those simple concepts, and then us are not getting confused. And this is the time now you see this teacher say, no, it's a format. Just do this, it's a format. Do this, it's a format. But account is very, very detailed, and it's very, very complex. But the complexity of accounting dwells on the foundation. Once you understand the foundation, you will enjoy the complexity of accounting, because every transaction, you will be familiar with every transaction that will be made. We'll talk about errors. Difficult, very difficult to understand. When you talk about accounting errors, you understand why accounting is very difficult. When you start adjustments, that is when you understand why accounting is difficult. I remember a lot of people a lot of school-going children begin to drop accounts. They begin to stay away from accounting when it comes to errors and adjustments, because their things are complicated. So when you have this teacher that is confused because he went to this private school that is not known, you start confusing the learners, and learners will start running away from accounts. So the foundation in accounts is very, very important, because that provides the basis for every topic that you are going to learn. It provides a platform for you to understand the complexity of it, because accounting doesn't just end in financial accounting or corporate finance. We have financial reporting, we have cost accounting, we have management accounting, we have all sorts of accounts, taxation, everything. But if you fail to understand the foundation of accounting, the double entry system, if you fail to understand it fully in details, it becomes a problem. Because some of the transactions that will be happening for you will be like, since this transaction is like this, definitely this is going to be debited, and this is going to be credited. But you discover that the opposite is the case, and you become more confused, and you start saying, accounts, I think, because of. But you forget where you're coming from. And mainly, I don't blame the learners. Sometimes I just blame the teachers who teach them. They just go there with nothing to show. They'll just go there with a double entry, a simple concept, credit the Shanyuko and debit the Shanyuko, without explaining it fully, what it means. Because the debit the receiver and credit the giver. If you debit the gains and you credit the gains and debit the expenses. You credit what goes out of the business and you debit what comes into the business when it comes to asset. That was a fairly double entry system. Credit the give and debit the receive. But if this teacher fails to explain it in details, you discover that you start having problems as a learner, because there are certain complicated transactions that will confuse you when you fail to understand this. So we're going to do adjustments. After just doing final accounts, we're going to do adjustments. That is where you discover the real accounts, because that is where the double entry system is being applied fully. The adjustments, the errors, people run away from accounts when you do that. Depreciation itself is a topic on its own. The way things depreciate, it's a topic, and it has, let me say, it has complex. It has a little bit of calculations Not complicated calculations, simple calculations, but confusing. You know, you fail to understand it. So all these things that we're doing, the balance carried down, the balance brought down, you should understand it fully, because even when you start doing errors, there's an error of complete reversal where things just swap like this. But for you, because you are down, you think, no, because this error was supposed to be recorded on the debit side, but it was recorded on the credit side. So we're just going to get this same figure and just put it there, and get this other thing and put it there. Wrong. You get it all wrong. And then when you discover that that figure doubles itself, you'll be confused. How is it doubling itself? When you're just supposed to switch like this. But how come we are switching, but the same figure is doubling itself? So you become more confused. Why? Because of the simple concept. This, the foundation, the double entry system, and this, my balance brought down because you didn't pay much attention to it. You didn't understand them fully. You'll be confused. You'll be very much confused. You won't even know. Some people don't even know. Some teachers don't even know what it means by the balance carried down and balance brought down. So when you discover that there the transaction is doubling itself, because you fail to understand that concept, your teacher has failed to explain it fully, because it is coming from a private institution that is not even known. You fail to understand this, you start running away from accounts. We've seen people that quit school because of accounting. They just quit the program. Me, I can't do Bachelor of Business Administration, especially Bachelor of Commerce. I can't do Bachelor of Commerce because accounting here are complicated. Because of where you're coming from, you're this Tao teacher. That made it difficult for you. So foundation accounts is very important. So as we go further, we will understand these things fully. Thank you very much. On our next tutorial, we'll talk about final accounting, where we'll talk about the trial balance. Where we extract. So on the next topic, we are going to extract the income statement and the balance sheet from the trial balance. So we have more complicated trial balances. This is just a simple illustration of a trial balance. We have more complicated transactions where you extract a very complicated trial balance. So in with some of those trial balances that we'll be doing, you discover that there's depreciation, there's what and what and what. Those complicated calculations we'll discuss more. So on our next topic, we're just going to start from here. From here, we extract an income statement and the balance sheet. From there, that's where we're going to have adjustment. Everything, adjustment, and it will be drawn from the trial balance. Just simple illustration. That's where we draw out those complicated things like depreciation, what depreciation, accruals, a lot of things. Complicated stuff. They are going to be drawn out of this. So if you miss this concept, then you are gone. So our next topic, we'll start from the trial balance. And from the trial balance, we're going to extract the income statement. And from there, it will just be income statements, because from there, we'll probably move into manufacturing accounts, which is a bit complicated, but it will also be coming from the trial balance. From there, we'll do partnership, a bit complicated. From there, we'll do accounts for companies, a bit complicated. From there, I wanted to talk about this. From there, there's another topic called the club accounting. I call it club accounting because it involves these non-governmental, the non-profit making organizations. So there's that aspect as well, drawn from the trial balance. Very difficult to understand. Complicated terms, difficult to understand. This is where learners get confused, especially when it comes to the issue of recording transactions, because there you'll be confused. They are complicated things because they don't calculate profit. The profit you call profit, for them it's a non-profit organization. So there's a term that is used when it doesn't dwell on profit and everything. So you discover that you'll be using complicated terms. And there are terms
that will confuse you. You see this term, it has a figure on it, and then you because you are confused, you be thinking that, oh, maybe this, because it's explaining like this, when you do this, it's going to be recorded on the debit side, and then you discover that the opposite is the case. So that one is a bit complicated. On that one, I encourage you again to go back to what we did, because once we start that one again is what makes people quit accounts. Because a lot of people learn away, they fail to understand complex stuff that happens in there. So everything, all the topics that we'll be doing apart from now, they will have a lot to do with the trial balance and the extraction of different books out of the trial balance.